After the past difficult years for the financial industry, we asked the asset managers among BRI members how they see 2023. In the last video, we focused on macroeconomic issues such as inflation and geopolitical risks. Now we want to take a closer look at alternative investments and clarify how the individual asset classes could develop in this environment. It should not surprise that infrastructure, equity, private equity and private debt are the most prominent among GPs. And given the current market conditions and demand from German institutional investors, most GPs that are not yet active in these asset classes are preparing to enter those markets. Private equity investments are actively managed by 53% of BRI members' companies. It is noteworthy that even though corporate private equity and debt are facing more challenging times from the current inflationary, fiscal and monetary circumstances, most investors plan to increase their exposure to the historical performant asset classes. As a result, a large proportion of investors are approaching their long-term strategy goals for private equity allocation. Little room for maneuvering now exists for those who have not yet done so, especially considering the denominator effect in the public markets. Private debt is still on track to catch up to private equity investors' demand. Debt fund managers both in the US and Europe are very confident about near and long-term continued growth of the private debt industry. Looking ahead to 2023, interest rates and credit spreads are expected to remain key factors. Especially direct loans have the advantage of being from a high proportion of floating interest rates, which make them more attractive compared to traditional fixed income securities. Nevertheless, investor sentiments toward private debt is positive. Private debt asset under management could grow to $2.3 trillion in 2027 according to Preqin, although at slightly slower pace with fundraising and performance than in recent years. This was a short summary of part 2.1 Alternative Asset Classes of our newest publication What's More to Expect in 2023, a GP's perspective among BRI members. In part 2.2, we'll get a closer look at infrastructure equity and debt and real estate equity and debt. You can find the link to the whole article in the video description.